uh, technology. And we have with us Rohit Anand, the CFO at Tech Mahindra, joining in on the show. Rohit, hi, good morning. I can't help but talk about N. Chandra's commentary yesterday, saying that it's a dark forecast for the year ahead. He says there are still facing supply chain shocks like fuel, semiconductor issues. He's saying that, macro environment is looking very, very challenging and the year will likely see low growth and high inflation. Are you as alarmed and worried about the state of things?
Yeah, so thanks for having me over. I think there's different aspects playing in macro and micro. So macro, as you all reading from the newspaper side, inflation's obviously high in all the markets. Commodity prices is soaring, right? So I think from a manufacturing perspective, it has impact on different sectors differently, depend on the price elasticity of the segment, right? From an IT perspective, I would say we have been seeing supply side pressures almost for the last 12 to 18 months. You're aware of that. So that continues, which is a reflection of demand, right? Because we've had post-COVID, the demand has really expanded from an IT perspective. Transformation projects have boomed across the globe, and we've benefited out of it. So from our perspective, when we correlate the macro commentary to micro, which is our data in terms of our pipeline, in terms of the projects, in terms of conversations we're having with our clients around the globe, we right now not seeing any impact reflective of the macro narrative, right? So pipeline is still strong. New projects are still being won. We just, if you look at the last quarter, we announced deal wins of $1 billion. From a future perspective, while the peak might be over from a demand perspective, which we saw for 18 months, but from an industry standpoint, we still feel the growth's going to be favorable as we look forward. It's not reflective of the gloom on doom that we're seeing in the macro side.
I'm quite relieved to hear that, as would be your shareholders, Rohit. But tell me, post the fourth quarter, and I'm just getting into numbers here, you had indicated deal wins in FY23 could be about $4 billion. Any change to that? Would you up that, reevaluate that?
So yeah, I mean, let's be just correct. We don't usually give guidance, but what we've indicated last year, and we've kind of re-elaborated that, saying that we typically see because some of these closures are cyclic in nature, as the way they close deals. So we said that 700 million to $1 billion is the range we see quarterly trending based on the pipeline and timeline of deal closure. So we'll continue with that, which was similar to last year in terms of deal wins. We don't see a change there. The visibility usually for us is 12 to 18 months cycle. So right now it looks robust, but given what you've been hearing, what we've been reading, we continue to have those dialogues with our customers, and we look at our pipeline data regularly to see if anything changes.
Rohit, hi there, good morning. Let's get in a sense as to what the outlook is when it comes to, the trend that you're expecting, because the street is a bit worried that the US is going to go into a recession and that's going to derail IT spends. Is that worry a little bit overdone? Have you had any conversation with your clients? Have you been in discussion?
Yeah. We've been having discussions regularly. It's a part of the regular customer interaction cycles. So, we've not seen too much of client worry right now. I think two way to look at it. Obviously, there could be short-term freezes on budgets and spends where people might want to conserve given the uncertainty around it, right? But at the same time, from an IT segment perspective, it's also an opportunity to help further offshore a lot of their processes, which helps them in their cost cycle management, better efficiency to focus on the core areas of their operations, right? So I think it's an opportunity as well, might give some short-term knee-jerk reaction in certain organizations which are more impacted on their margins. But we've not seen that rampant, as I mentioned, in our client conversations. Some startups, I would say Bay Area companies are having a little bit more reactive changes versus the others who are maintaining the status quo, in fact, doing more and more projects right now.
I don't want to probe because I know you're not going to be very forthcoming when it comes to outlook guidance. But for 4 quarters in a row, given that the USD growth has been over 4%, just want to understand if that's a reasonable expectation for FY23?
What we've said in our earnings last time is for the year, looking at the trend, we'll be, when we look at our businesses, 40% of our businesses in telecom. And when you look at telecom cycle, it's favorable, right, with the 5G wave. So 5G being the tailwind, we said that, with 40% of that business and some of the enterprise verticals where we think our growth potentials and in the pipeline, the deal closure are favorable. We're looking at overall from a business perspective, we're looking at a double-digit growth for this year. I mean, that's all we'd articulated because, as you know, we avoid giving specific guidance.
Okay. I just wanted to understand going forward as well, what are the attrition rates or the trends rather so far for Q1?
I mean, again, it's I can indicatively tell you how things are moving. So if you look at last 2 quarters and maybe correlate to it, we've seen our quarter ending attrition numbers improve. So the cycle, which was, kind of moving upwards from an attrition percentage standpoint, started to plateau and then come down. But I think, as I mentioned, the supply market's still tight. There's demand for digital skills, niche skills, data analytics, cybersecurity. All these are in heavy demand, and we continue to see a tight cycle in the market there. So attrition will hover around an elevated level, is the view, in the next couple of quarters before maybe in the second half of next year, it started bottoming out as we look forward.
As you look ahead, and I don't want a numbered guidance here,
Yeah.
What is giving you sleepless nights? What's your big key concern going forward?
So right now, the newspaper headlines. So the macro environment as laid out, by a lot of people, and you hear some of the top CEOs of multinational banks and investment banks calling out, gloomy headlines. I think that's obviously a sign of worry, but, we stay to the fundamentals. We try to stay to the basics, which is, where are 1,000 customers? Where are they spending? What are we doing to help them better improve their margins and operating profile? And we continue that dialogue with them on a regular basis, staying close to them because that's what matters. That's ultimately what will reflect finally in the numbers in our progress move forward. So we do that, and internally, I think it's a transformation we started in the company around 6 quarters back on various aspects, including delivery transformation, process transformation. We'll continue evolving on that because that anyways we were working on. So in current environment, we won't stop there. So I think from our perspective, making sure we focus on our customers and continue to drive value for them. That's what we're trying to do.
Okay, Rohit, great to have you on the show, and thank you so much for so patiently answering all of our questions.
No worries. Great to be on the show. Thank you. All the best.
Thanks. Okay, that's the word.